the ultimate destination for smart investing. Welcome to Invest Ideas, where we turn your financial dreams into reality. Subscribe now and join us on the path to financial freedom. Charlie Munger is an investment legend who has achieved incredible success in the field without ever taking a course in investing, finance, business, accounting, or economics. Despite this, he is widely regarded as one of the greatest investors of the 21st century. Munger created his own investment fund between 1962 and 1975, achieving annual average returns of 19.8%. He was also a key figure in the growth of Berkshire Hathaway, which is now the largest investment company in the world and the sixth largest company overall. What's perhaps most interesting about Munger's approach to investing is that it doesn't conform to conventional textbook-type investing. Instead, he has carved his own path to making money in the market. For Munger, it never matters what other people think, he just thinks about the facts. In this article, we'll take a closer look at Munger's approach to investing and how you can apply his principles to your own investment strategy. One of the first things to note about Munger's approach is that he doesn't believe in diversification for its own sake. Instead, he believes in finding a few good opportunities and backing them heavily. Munger has repeatedly said that he finds it easier to focus on 4 assets where he has a high probability of getting it right than on 100. In Munger's view, perfect diversification is a myth perpetuated by finance professors and Wall Street professionals. Instead, he advocates focusing on a few high-quality assets and investing heavily in them. Munger's personal portfolio and the portfolio he manages at the Daily Journal Corp both reflect this philosophy. His personal portfolio consists of just 4 stocks: Berkshire Hathaway, Costco, Daily Journal, and Lee Lu's Fund. The portfolio he manages at the Daily Journal is similarly concentrated, with just 4 stocks: Bank of America, 43%, Wells Fargo, 38%, Alibaba, 15%, and US Bank Corp, 4%. Munger believes that this approach is the key to his success as an investor. So, how can you apply Munger's approach to investing in 2023? While we can't ask the 99-year-old investing genius what stocks he recommends this year, we can look at his current holdings and what he has said in the past about how to invest. Munger has 2 big investments in China, one in Lee Lu's fund and one in Alibaba. He sees more positives than negatives with Chinese investments, a position which many investors disagree with. Munger believes that despite the political risk and other challenges, China is still a good investment because it produces more goods, services, and profits each year. In contrast, Munger avoids cryptocurrency like the plague. In his view, it's stupid because it could go to zero, evil because it undermines the Federal Reserve System and the national currency system, and makes us look foolish compared to the communist leader in China, who was smart enough to ban Bitcoin in his country. Munger vastly prefers stocks to any other asset class, including crypto. When Munger chooses stocks, he has 4 simple rules that he follows before buying. First, he looks for assets that he's capable of understanding. Munger is known for his deep knowledge of a wide range of subjects, and he believes that this knowledge is key to making good investment decisions. Second, he looks for companies with a competitive advantage. This could be a strong brand, a patent, or some other unique factor that sets the company apart from its competitors. Third, he looks for companies with good management teams. In Munger's view, a good management team is essential to the long-term success of a company. Finally, he looks for companies with a reasonable price. Munger is famous for saying that he'd rather buy a great company at a fair price than a fair company at a great price. It's also worth noting that Munger doesn't just invest in any company that meets these criteria. He prefers to invest in companies that have a track record of delivering consistent returns to their shareholders. He once said that he likes investing in companies that aren't going to screw up, but they're going to keep doing what they've been doing. In other words, he looks for companies that have a long history of steady growth, rather than those that are growing rapidly but have yet to prove their sustainability. Another important aspect of Munger's approach to investing is his focus on avoiding mistakes. Munger believes that avoiding bad investments is just as important as finding good ones. He once said, "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent." To avoid mistakes, Munger relies on what he calls mental models. These are essentially mental frameworks that help him make better decisions by considering a variety of factors and potential outcomes. Munger has a deep understanding of a wide range of disciplines, including psychology, economics, and history, which he uses to build his mental models. By having a broad perspective and understanding of different disciplines, Munger is able to see connections and patterns that others might miss. One of Munger's most famous mental models is his inversion principle. This involves thinking about a problem in reverse, considering what not to do rather than what to do. Munger once said, "It is remarkable how much hard-thinking people will do for avoidance of what they don't want to do compared to what they will do for something they really want to do." By focusing on what not to do, Munger is able to avoid mistakes that others might make. Munger's approach to investing is not without its critics, of course. Some argue that his focus on a small number of high-quality assets is too risky, and that a more diversified portfolio is a safer bet. Others point out that Munger's success is largely due to his partnership with Warren Buffett, and that he wouldn't have achieved the same level of success on his own. However, Munger's track record speaks for itself, and there's no denying that his unique approach to investing has paid off handsomely. In conclusion, Charlie Munger's approach to investing is unconventional, but highly effective. By focusing on a small number of high-quality assets, avoiding mistakes, and using mental models to make better decisions, Munger has achieved incredible success in the investment world. While his approach may not be suitable for everyone, there are certainly lessons to be learned from Munger's philosophy. As always, it's important to do your own research and invest based on your own goals and risk tolerance. But by taking inspiration from Munger's approach, you may be able to achieve greater success in your own investment journey. Thanks for tuning in to Invest Ideas, where we bring you the latest insights and strategies to help you make informed investment decisions. Don't forget to hit the subscribe button and stay ahead of the game. Until next time, happy investing.